mining's back on people's radar and people are starting to appreciate the contribution that mining's made. We're at the forefront now, particularly in this country. And it's particularly good for Agnico, given the business we've built.
Mining is entering a new phase. After years of restrained deal-making is accelerating, gold producers are consolidating, chasing scale, and locking in long-life assets as prices hover near record highs. But this isn't the last cycle. This time, the focus is different. Discipline, jurisdiction, and durability are driving decisions, not just growth. And that's where Agnico Eagle stands out. While others are expanding, the company is making a calculated push, consolidating a major gold district in Finland in a move that could reshape its long-term production profile. So, for investors, the question is no longer just about gold prices, it's about how capital is being deployed at this point in the cycle. Well, I'm joined by Agnico's Chairman Sean Boyd this afternoon. Sean, thanks very much indeed for coming in.
Great to be here, Devin.
Well, look, it certainly has been very, very interesting times in the mining industry, right? You've seen a lot of deal-making happening, consolidation, focusing on scale and securing those long-lived assets. I'm wondering, how would you see the moment we are in the cycle? What does it look like for you, and how does Agnico fit into that?
Well, it's funny. We've seen multiple cycles, and over the years, and being in the business for 4 decades, I've seen gold as low as $250 an ounce and as high as $5,600 an ounce. And so you still have to run your business. And I think, as you mentioned, you run it in a disciplined way. You run it by following a strategy that's well matched to your skills and something you're comfortable with in terms of how you're building value. So that really doesn't change. I think you've got to stay at it. I think one of our advantages that we've had, and that's just based on strategy, is we were very busy during COVID. While others, I think, put their pencils down and weren't sort of pushing, we were actually doing deals and working on deals in 2020, social distancing in a way when we were in discussions, and we were adding some important pieces to our business. So we're really taking advantage of that now with production of around 3.4 million ounces. We can see record earnings in the past quarter. Yeah. But again, it's how do we redeploy it? And we redeploy it in a disciplined way. We could be anywhere in the world. We're big enough, but we only choose to be in a certain geographic region, and we define it with 2 simple criteria. What's the geological potential like? And can we see ourselves building a multi-decade successful business? And in those regions where we're doing that. And as you mentioned, in Finland, we like that as a place to do business. The geology is great. We've got a good business in Kittilä, and that consolidation, doing those 3 deals simultaneously, gives us a large land package, some reserve and resource, 50 kilometers away from our operations. So that makes good business sense, regardless of the gold price.
There's a lot in there I want to talk about. But let's touch on those results, right? Some very impressive results coming through. You had, what, 1.7 billion in net income, if I'm not mistaken. But yet, Sean, you reiterated guidance. You didn't raise it. What's the reason behind that? What's that all about?
Well, you can't go up and down. We've just been consistent over time. I think that's one of the things that we've done well for the last 15 years or so, is set targets that were achievable and then just execute and hit those targets. And I think that makes good sense. You're trying to eliminate volatility. Mining's hard enough. You start complicating things and changing things all the time, you're just going to create uncertainty. And we've been fortunate that we have a group of assets. Our teams understand them. They know what they're capable of doing, and they work those assets. I think key for us is exploration investment. We're spending almost $500 million a year. We're adding to reserves. We're converting resource to reserve. We're growing those deposits. We'll continue to do that. So not only record financial results, we're seeing our deposits grow. We've also got a growth pipeline, internal growth pipeline that should take our production to over 4 million ounces over the next few years beyond 2030. So that's good. even though we're a big company, we can still grow. And that's because we put those deals together a while ago when gold prices were lower. We got them for a good price, and now we can take advantage of those assets.
It's interesting you're talking about growth because production has been softer year on year, and it's not an exclusive Agnico story. You've seen this production trade happening of late. You don't blame someone for asking with those results. Is this a margin story, or more of a margin story than a growth story? How would you respond to that?
I think it's just a high-quality business story that happens to mine for gold. And that's what we started decades ago, is we said, look, we just happen to be in the gold business. Let's create the best business we can create that can compete with other businesses in terms of the quality of the investment proposition to the investors. That's what we have at Agnico. But we have that added benefit where we're not too big that exploration cannot, doesn't still move the needle. It does move the needle. And we can see that with something like Hope Bay. That's something we picked up for roughly $250 million 4 years ago when the federal government said, no, the Chinese entity can't own it. We did that deal over Christmas, New Year's in 2 weeks. We said our investment thesis was to drill it. We spent a few $100 million doing it. It'll come out to be much bigger than it was when we put it on care and maintenance. So those are the types of things that you do through all cycles. And we're in a position to not only provide those quality financial results, keep our costs under control, but still provide a good exploration story and provide the growth with projects that we know well in regions that we have a successful track record of building good businesses in.
Well, the fact that you spoke about Hope Bay, let's stay there for a while, right? I mean, very, very interesting region, the Arctic region at this point in time. I mean, and for varied reasons, right? How does it look to you how this has evolved in terms of response from the wider fraternity? I mean, particularly government and on the infrastructure side as well. What's going on there?
I think there's a few things. I just think from a country perspective, from a sovereignty perspective in the North, it's clearly now important. It's a focus, obviously. But I think it goes beyond that, because I think if we're smart and we're effective and we're efficient with our investment dollars, particularly from a government level, then we can set this up for decades of value creation for 40 million Canadians. So not only will the communities benefit, not only will our Indigenous partners benefit, but we'll basically be putting in infrastructure that'll allow us to do responsible, sustainable development for decades up there. And it's really opening up a vast new area of the country. So that's important. You can still get things done. It's not an easy place to do business because it lacks infrastructure at the moment. But think about it. We've built a business over 20 years. We've invested over $10 billion. That business is now roughly a quarter of the GDP of Nunavut. And so when we look at Agnico and step back, that's an important part of Agnico's Canadian business. But we've been able to build one of the largest public companies in Canada with 80% of our production roughly coming from Canada. And a big part of that comes from the North. So it can be done.
And one wonders why, and not to look back, because I know we're moving forward, why the momentum was so slow on that. I mean, can we avoid some of the mistakes in the past?
Yeah, I think that's government's got all sorts of priorities. And so, governments tend not to think long term. It's interesting, though, that our Indigenous partners by nature think long term. Mining companies by nature think long term. So there's a good match between our Indigenous partners and the mining industry, which is good. Government's being pushed to short-term priorities, and that's just politics. But I think now the bigger picture is for Canada. Let's focus on what we do well. Let's take advantage of the opportunities that exist for us as a country. And mining's a big part of that because it basically was one of the key industries to build a successful country. So let's get back to doing what we do well, and let's focus on an area that's largely underexplored, that needs infrastructure, that screams opportunity, not just from a resource development perspective, but from a community perspective and from a people perspective in the North.
And at the same time, if you cross the globe, head off to Finland, where a lot of activities taking place. I mean, Agnico has been familiar with Finland for a long time, but you're ramping up the land package in a very stable region. And that's, again, another trait of Agnico. What gives you the confidence that this is the right time here for this?
Well, it makes sense, given one of the theories was when we went into that investment in Finland back in 2005 was that we felt we could build a platform where we could mine roughly 200,000 ounces a year on a favorable land package that had potential to get bigger and go deeper. And we felt that there would be other regional success. It took longer than we had expected. So we did see regional success and exploration success in that region. So this consolidation of that land package with Rupert and those other deals with Orion were really a region that's 50 kilometers from our main business there. So we have the skill sets in place. We have strong relationship with communities and with the national government in Finland. So we saw a deal that we could put together and build that platform, expand on what we've done well there. So that's natural, what we've done. Look at how strong we are in the Abitibi. When we go from Detour to Kirkland to Val d'Or and look at the production there of over 2 million ounces, look at the tens and tens of millions of ounces of reserve and resources, that's the backbone of how we built this business.
It's a lot of capital going into Finland. And one asks oneself, are there non-negotiables here in this particular type of move that you simply, if it's there, I mean, you wouldn't go ahead with this deal? What are the non-negotiables?
I don't think there's non-negotiables. I think what we look at is, can we find regions of the world that we're comfortable doing business in that have real good geological upside? This is one of those regions. So there's a little complexity there in trying to do 3 deals simultaneously. It only works if all those pieces really fit together, because then it sort of unleashes the geological potential and really gives our team an effective sort of playground to do what they do best, which is go into favorable geological belts, be patient, but be aggressive on exploration. Our guys are good at understanding exploration results and have the vision of how those can become mines. We've done it multiple times, and we don't think this is any different. We think we're going to have that same success here.
Well, I asked because, I mean, I've heard you before saying that what's important is really a quality business rather than a big business. So that doesn't change any thinking of the past, does it?
No, I think that we've said that, and that's how we built this. If we had started out sort of in the late 90s when most of us got our sort of important jobs at Agnico, when the revenue was only $50 million, if we had started out back then and said, we're going to build the biggest mining company in Canada, the second biggest producer in the world, we probably would have messed it up. All we were really doing was, as we said, we had a gold business, let's try to build the best business we could. So, but having said that, as sort of the industry has evolved, scale's becoming more important. And if you look at the sheer size of these projects in terms of the capital required to build them and to build them properly so that they're sustainable over multi-decades, there's a lot of significant investments required. So scale becomes more important, but you can still have scale and still have a manageable business if you're focused on specific regions. So our scale is driven by being dominant in the regions we decide to work in. And so that makes it easier to manage, but it also makes it easier to identify the opportunities to invest more capital to build a higher quality business over time.
I want to go back to the results very quickly, Sean. I mean, you always paid that steady dividend, right? That's another trait there. And yet you have enough to put back into the business for growth. Is there a difficult balance to maintain, taking care of the shareholder, but still ensuring you have future growth being funded?
No, we've paid a dividend for over 40 years. I was there for all that time, except for the first 2 years, because I started in 1985. I think the first dividend was paid in 1983. And that dividend went up and down, but it was a priority for our CEO at the time, Paul Penna. He would always say, look, this year we can't afford to pay as much as last year, but the fact we pay something is important to those shareholders. And those were the times when we had 40,000 retail shareholders. And we had always pointed to that dividend as a sign of discipline, because we were always making room for our owners. And we would use it every single year in our budget discussions with our mine managers. We'd always bracket out a dividend. And they would say, oh, you're squeezing us here or you're squeezing us there. Why don't you just squeeze the shareholder? No, that's important, because that comes out first, because they're the owners of the company. So we keep that mindset. We're responsible to our owners, and that creates certain discipline around how we invest that capital. And so dividends important. We're doing more share buybacks, which is also important. We're going to increase the size of our share buyback program, our approved share buyback program, and that will allow us to give more back to the shareholders and still invest heavily in the projects.
I want to just go back to Finland and Canada for one quick one and just talk about the differences in these environments here, Sean. When it comes to permitting infrastructure and even just getting projects moving, is there some sort of comparison that you can make having just looked at both of these jurisdictions?
They both have differences, but one of the first things that our team said when we went to Finland for the first time is, my goodness, it looks like the Abitibi. In just terms of the setting, et cetera. And when we first went to Finland, I remember going to the town council meeting, and it wasn't an adversarial meeting. It was the mayor saying to us at the end of the council meeting is, how quickly can you get this mine built? So it was an understanding early on that mining was an important industry for this particular part of Finland, very close to a ski resort, but we've been able to integrate ourselves and build that value over time. So we see the same attributes, whether it's Quebec, Ontario, Nunavut, Finland, where there's an appreciation and understanding of the benefits that mining brings. And those are the types of environments you want to be in, especially when they have the geological upside. So we see that in both jurisdictions.
It does come at a time, though, these moves, when you have such geopolitical strain, right? When you watch things like what's happening in the Strait of Hormuz at the moment and everything that goes along with it, how does that impact what you talk about your colleagues around a table here when you're planning? Does that mean anything to you?
Yeah, I think when I first started Agnico in 1985, it was kind of drilled into us by our CEO because he had experience watching what happened to Falconbridge in the 50s when they built a big nickel mine in the Dominican Republic. So he was saying, look, we got to be careful where we go. We always say mining's hard enough. Don't complicate it. Don't go into regions that you really don't have the skill and the ability to withstand sort of the ups and downs around the geopolitical situation. So we try to take that out of the equation as much as we can and just focus on sort of building a quality business, keeping those drills turning, setting up a business that can withstand the cycles in the commodity space. And that's a formula that's worked really well for us.
Having said that, you have so many investors, so many companies focusing right now on the gold price and those near-term earnings. When you take a look at that scenario, what do you think investors are missing?
I think we're starting to see it. I think they were missing things a couple of years ago, but I think what they were waiting for is because they've been disappointed for so many years prior, and they were waiting for a demonstration by the industry and the key players within the industry that they were going to remain disciplined even as the gold price went up. And that's been demonstrated. And I think what they also wanted to see is the power of the cash generation at a higher gold price environment, which they're starting to see. So these are legitimate businesses. If you look at Agnico, we got up to, when gold was 5,600, we were the fourth largest market cap business in the country. And with largely Canadian production. So I think that speaks to where these businesses are now in terms they can go toe to toe with the biggest corporations in the country in terms of earnings and cash generation, and discipline now. And I think we're going to continue to see that because it's a formula that's sort of resonating.
You don't consider things like, well, if there's a pullback on the gold price, at what price does it make things unmanageable? You put a number to that?
No, but I do think that a lot of gold companies have worked their way through lower gold price environments. So I think the fact that gold has gone up, we haven't seen a lot of non-disciplined moves by companies. So I think it still sits in people's minds that, you know, things are really good now. But we know it's a commodity business, things can turn around. So you need to build your cash position. You need to put those investments in place now so that you can withstand lower prices. So I think the industry is well positioned. Literally, in 40 years, I didn't see a lot of industries with retained earnings in this industry. Now we're seeing everybody with retained earnings. So we would look at the base metal sector over my 40 years and be kind of jealous, saying, whoa, you guys have had cycles that have allowed you to really position yourself because you could repair balance sheets, you can build up cash, you can keep investments moving along. We didn't have the luxury for 4 decades of me being in this business, watching it until now. So I think that's a good thing, and that's positioning businesses to continue to invest in the right projects in the right regions, keeping those drills turning, which is important. So we look at it and we say, okay, even if you take the critical metal space, well, we're saying, hey, as a country, we have something to offer in that space. Well, yes, we do, but a lot of those deposits haven't been found yet. So we need to keep those drills turning. We need to focus on investing in infrastructure, open up new parts of the country. So all of that we should be doing that now. And I think we are as an industry.
As I wrap up, Sean, what do you think is perhaps one of the most exciting things about the mining industry you are looking forward to see over the coming short term?
Well, I think mining's back on people's radar, and people are starting to appreciate the contribution that mining's made to countries around the world in terms of building, quality countries. And so we're at the forefront now, particularly in this country. Given we're good at it, we have vast potential to take advantage of what nature has blessed us with in terms of resource opportunities. It's good to be back, sort of in the middle here. And it's particularly good for Agnico, given the business we've built, the size of the business, but our Arctic experience, our northern relationships, working closely with our communities. We bring a lot more to the table, and we're excited about being able to continue to do that.
Sean Boyd, Chairman of Agnico, thanks very much indeed for coming in.
Thank you.